You're absolutely right. Geopolitical tensions remain elevated, and I think that really will be the status quo all the way to November now, and we'll just kind of circulate through different issues. Um, in terms of the, the, the trade issue, we actually still believe that China will look to honor its obligations under the trade deal. But as I said, I think we're going to see a plethora of kind of like tensions all the way to November now.
But given that we are in the summer months, given that trade is thin, Kirk, do you think that makes the market at elevated levels more vulnerable to any risk or any bad news that comes in on the trade front between U.S. and China, or on the recovery news? As far as the virus situation goes back home in the U.S. and how the markets are essentially taking that on board.
I think the markets are going to be more sensitive now to good news. Week by week, we are learning to live better with this virus. And there is good news on the vaccine front, again, week by week. And I expect if we do see a vaccine by the end of the year, and which is getting more and more likely, that will buoy markets. So from our perspective, now is the time to stay fully invested. In fact, we're slightly leaning into risk a little bit at the moment. And as I said, I expect the markets expect all the way to the US elections now, there'll be elevated trade tensions or elevated geopolitical tensions with China, and they will look through that unless there's a mistake.
Unless there's a mistake. That's what keeps us on tenterhooks here, Kirk. So when you say you're leaning into risk, I mean, where specifically are you looking to put more money?
We remain slightly overweight equities, and within equities, we remain overweight the developed markets, particularly the US market, where we still believe there's value in the secular growth story. But having said that, it's quite interesting because although markets are slightly up on the year, both in the US and in Asia, underneath that, there is actually some very, very good opportunities. So what do I mean by that? As we know in the US, there's a handful of stocks which are up about 30% on the year, but the median stock is still down about 20% from its highs. So there are lots of opportunities for stock pickers at the moment. So for active management, we see equities as a good place.